It is a pleasure for us to be with you. I'm Bobby Coates, a professor in the Department of Agricultural Economics and Agribusiness in the University of Arkansas Systems Division of Agriculture. Now joining me, the rice trader, Jeremy Zwinger, and commodities expert, Shawn Hackett, to provide their unique collective insight into the changing global weather pattern and its impact on commodity market outlook consideration. Jeremy Zwinger is president and CEO of the Rice Trader, Farm and Trade Incorporated and International Commodity Institute. Jeremy's rice analysis and written commentary is read by an array of governments and businesses throughout the world. Jeremy is an ongoing participant in international rice events and conferences. He has a unique grasp of intercommodity relationships, as well as currency and oil price impact on rice markets. Shawn Hackett, commodities and financial expert, is president and founder of Hackett Financial Advisors. Shawn is a frequent contributor to Barron's, Futures Magazine, Quoters, Bloomberg, and authors the Hackett Commodity Report. Now, Jeremy Zwinger and Shawn Hackett will provide their unique collective insight into changing global weather patterns and its impact on commodity outlook consideration. Gentlemen, we look forward to your presentation.
To give you kind of an outlook, and Shawn and I are going to go back and forth. We're good friends. We speak quite often, and we debate the market aggressively. You know, we're going to break it down kind of like this. We're going to, again, focus mostly leading up to weather and how weather is going to affect the market. But we're going to start just by looking first at the overall market, which Shawn will give a quick view of. Then we'll talk about rice, and then we'll talk about the grain markets. Then we'll talk about short-term weather, and then the real topic, probably in the last half an hour, longer-term weather patterns and how it's going to affect prices, production, changes in weather, and such. We're in a world market. I think the first, as Shawn and I were speaking about what we're going to say today, you're not in a simple market, like we were saying. It's a worldwide market that's interconnected. And you have to get a second and just look at today. It's not just, you know, how we're relating to South America or how we're relating to our Mexican trade or how California is relating to Japan. It's a very intertwined world market with new supplies being developed and a very much an interdisciplinary move between the various commodities, which will affect what's going to be planted next year and where we're going for prices. Just on that note, we had the World Conference, which Shawn gave one of the keynote speeches at just in November in Macau. And next year it's going to be in Vietnam, very likely, and it's the 10th year anniversary. So, you know, it's just part of the whole equation of the rice industry getting together. So before Shawn takes over and we hear just kind of an overview of the current market, I think, you know, this graph, as simple as it is, kind of explains the politics and the complexity of the market today. It's not simple. When you look at price, if you look at direction, you have population and trade, growers, and how do you keep consumers and growers happy at the same time? You have oil playing in it. You have weather, like we're going to talk about today, and water, and of course politics. You know, we could spend an hour just talking at least on rice, just in the U.S., another hour talking about world trade, another hour talking about prices, and another hour talking about politics. If you just look at the snapshot of things today, we have a drought in California. We have the instability of our politics on the Farm Bill and 199A and et cetera, NAFTA, the Trump administration. Just very, very volatile. Elections in India next year, which probably will see them retract from trade. Elections in Indonesia next year, which will probably have them increase. And you have such things as NFA only having a few days of stock in the Philippines. These political things are going to be highly affecting trade, just like the major macroeconomic things are going to affect what happens in price, what's going to happen. But you also have to realize at this point, these political things are affecting the market almost in peer pressure way. They're telling the market certain signals that may or may not be right, but the market still follows them. And so I'm going to make a premise today, and Shawn will take over. When you look and you talk around the world, and I just got back from Asia again, you have to understand in this point in time that we're at, the world does not evaluate food. We don't evaluate food properly, unlike when there was starvation in the 70s in China, when there was major problems as we developed our food. And so a lot of the current activity is with food as a secondary issue, not given the importance or valuation it should, and with people such as Bobby or Shawn not getting the attention that they really should in this key time. And that's the key of the market going in cycles. The current market doesn't evaluate the importance of food, and there is effects to that. And I think that's very important to our talk as we start to get into the weather and the clear data where the weather is showing it's going to have a major shift we probably haven't seen in 200 years. And with that, I'm just going to move over to Shawn. Shawn?
Thank you, Jeremy. Appreciate the introduction. One of the things that we always look for in various asset classes is when they get to extremes. We kind of call it the modulus of elasticity. It's when markets relative to each other get so far out of whack that major reversals are in place. This chart is one of our favorites, where it's measuring commodities relative to stocks. And you can see the circles on the top and the circles on the bottom, which all reflect very important topping and bottoming points. And you can see where we are, that this chart was as of the end of December. And it shows that we are at an extremely important turning point for commodities as an asset class relative to the stock market. We all know stocks have been going up every day, every month, every week, every year, and commodities have been languishing. But we have reached a point where the yin and yang has to come back to normalcy. So we're very optimistic that we are at a point like we were in the early 70s, like we were in the late 1990s and early 2000s, where commodities, those involved in agricultural commodities, are going to see a much, much more fruitful time, and the value of their work is going to be appreciated more versus maybe, let's say, Facebook or Bitcoin, which have been the stars and the vernacular that have been talking about throughout the last several years. So we like where we are sitting today for the next 3, 5, and 10 years, that commodities and ag commodities are going to be a much, much better place to be for those that are involved in the food chain. As we move along, why is everyone bearish grain markets? They're bearish grain markets because all they see is endless supply, beautiful weather, fantastic yields, genetics supposedly never ending. Yet under the surface, we see something developing that's actually different. Rice market is a classic example of this, in that we were actually seeing supplies relative to demand falling for the last 3 to 4 years. In corn, we have 2 years of falling supply relative to demand. With wheat, we have falling supply relative to demand, ex-China. We can go on, but actually what has happened is we've actually peaked in our ability to produce enough food in terms of the grain markets to actually cover the burgeoning demand that's going on. Now, market doesn't pay attention to it right away. It will turn, and everyone continues to look in the rearview mirror, and that's the opportunity that we see going forward, that as that becomes more appreciated and Mother Nature gets involved more frequently with extreme weather, it's going to be a slingshot effect. And it's going to take everyone by surprise, and that's usually what happens with these kinds of markets. I think Jeremy, who probably could comment on this as well, talked about this quite a bit, right, Jeremy?
As Shawn was saying, and again, I can't talk enough about both Bobby and Shawn. They're brilliant minds in this market. And Shawn's ability to understand the interconnectivity of the major grains and the softs to rice is amazing. I'm a bit more of a specialist, more of a wide, especially with water and other things. But I'm going to talk about that aspect of rice right now. As Shawn's been saying, there is a mixture between the grains and rice. On one end, there's key things that say there's plenty of supply. And let's just look at that key point. Like I said, the key point number one. Because as we move forward here, we're going to try to make some key points because we really want to talk about weather and come all the way back around about why what we're seeing today is important, but how what we're seeing today is a piece of the longer term trend that's very critical. So let's make the first point. Rice is actually relatively tight, but production is significantly over consumption. Okay? But look at world ending stocks for rice. record or near record. It's tough for prices to run when you have record supplies. It's simple economics, obviously. You're seeing it in the grains too, which is even more predominant. And above the line, I call it the higher supply period. Below the line is a lower supply period. Obviously, prices have a much better chance to run when stock-to-use ratios get tight. What Shawn is saying, a wise man looks ahead. He needs to see the bull market before it occurs to really accept the valuation. Today, it's tough to see the bull market because you have such high stocks. And in fact, I'm normally a bull as a natural person. I believe the value of food and the value of the commodity that we're working in. And so I'm normally bullish, but it's even for me difficult when I have a realistic point of view that there is a huge amount of grain stocks today, but that can change in one or two bad crops. This is a graph really for Shawn, so I'm going to let him just quickly comment on it. There's a difference between rice ending stocks, which is next, which are really quite tight. Although our overall stocks are exceptional, if you take it per person, they're actually pretty flat. They're not tight as they are down here. They're decent, but getting tight. So Shawn, if you'd be just a comment, like I said, more on the grain stocks, how there's a bit of a difference than there is in rice, quickly.
Well, I think the point I was making before is that if you can see now for 2 straight years, ending stocks relative demand are now on the decline. They're still large, they're still ample, but they're on the decline. What does this mean? This means that despite record yields, huge crops, we have not been able to grow as much as demand has been growing. That's remarkable. When we looked at 2012 and when the U.S. actually ran out of corn, we had to import corn from Brazil. We were super bearish. We were super bearish because we had nowhere to go but up with ending stocks because production and demand were getting out of balance, even though the market was looking in the rearview mirror. What we see here is a market that's already on the decline, and we haven't had a bad crop yet. We are going to have weather problems. We are going to have crop problems, even though the last 4 years haven't shown that, and we're going to discuss more of that later. But when we do have a crop that's a bit short, this chart is going to collapse much more rapidly, and everyone's going to realize and see that the turning point was actually now, and this was where the actual opportunity was for those in the ag trade to prepare for a brighter future. So we think the corn market is very indicative of the trends we see going forward.
Thank you, Shawn. And so now I'm going to talk very specifically about rice. Again, in a different day, this is a much longer presentation. In fact, Shawn's talk just in the grains, which was about an hour at the World Conference, just covered a sliver of the things we're talking about today. And you can go very deep on. But to continue on those points, you have to look at where the stocks are. As you can see here, you have extremely high stocks. But who is holding them? Who is holding them is China. And if you take Chinese stocks out of the balance, stocks have been dropping since 2013, significantly dropping. And I like to look at it also on the exporters. Same thing. If you're going to see how prices can run, you have to look at where are the available supplies and where can you buy, not just where the overall stocks are. So if you can look from 2013 to today, the same thing. A major reduction in supplies, especially in Thailand, which has seen a massive depletion of their government-held stocks, which peaked in 2013 as well. On that note, all of this interbalance is going to affect the acres coming up. I'm going to make a brief comment on this before we move on to the grains and a few more rice topics than the grains. Everybody's asking, what are the acres going to be next year? It's a very difficult question. If you can look, we were at 2.3 based upon the certified acres, the final certified acres in 2017, or 2017 crop. The 2016 and the January final report was actually 3 million. Do we go up to 3 million in the U.S. again? If there's not price change, you're going to see for sure a major upswing. What is that major upswing? Well, tell me what prices are in the next 4 weeks. Every day from now, from February 1st, the rule of thumb is you're locking in acres. The growers are buying seed. In California is about 6 weeks later, and I'll get into in a second. It's much more complicated due to weather and other factors that are currently going on. But you're going to see an increase in acres. That's obvious. at 12.30 underweight for long grain. It's very good today. But soybeans are also a good price. They're $10 beans for new crop. That's going to leave some strength in soybean rotations especially. So is it going to be a record crop? I don't know. Is it going to be a good crop? It'll be a good crop. And it's too early to say what that good crop is, but it'll be a good crop, based upon current prices. I will be very, very conscientious of risk management with what we're going to say today, because long-term good does not mean today it's going to be good in the new crop. You have to be very conscientious. Just on that too, I've mentioned a lot about a long grain. I'm just going to say in medium grain, and again, these are very brief points. We could talk for a long time on each piece, so I'm going to make very quick brushes. The medium grain market's seeing some of the things that you're seeing in long grain, indica rice. You're going to see heavy supplies in Australia. You're very likely going to see an increase in medium grain supplies in the south, some on the new varieties, and just its overall competitiveness. And the one I would watch out for, beyond even Australia, is Vietnam. Vietnam has come on extremely strong. People have told us they're as high as 1 million metric tons of japonica rice from 3-4 years ago of being maybe 100,000 tons. That makes them one of the largest exporters in the world, and you almost hear nothing about it. It's a key piece that's just not been talked about, and they've had some help from international parties to develop that interesting industry. The opposite to this is actually Egypt. There's reports that in the coming crop there'll be half acres. Luckily, they have a large amount of supply, but this is the interplay in all the market. But it's still not the most important piece, which we're going to get to in a second. So on that really quick point, you don't hear it almost ever, but last year was the best year of trade in history by volume. I don't see an article on it. You never heard it almost all year. We started saying it in about June of last year that it looked like it would be the largest trade year in history, and prices didn't react. So this last year in 2017 was the largest trade we've ever had in the history of Earth. And you can see it here. And it was based on a lot of Indian trade. The Indians have been amazing. If you look back to 2011 to today, and the crops, including the coming crop, which we're told is about 109 million metric tons, which will allow them to export 8 to 9 million metric tons in the next year, which will keep India very aggressive. You've just seen amazing trade. India's come on. The Thais have an amazing industry, very good leadership, consistent. Some fluctuation in the U.S. and Vietnam, but really it's a Thai and India equation. The complication of this is that India does have an election coming up. The natural thing as an election is a pullback of trade to protect food policy. It goes back to the things that often go unnoticed. There's many things we can't in the rice traders say. Probably 60% of what we know we can't even say about markets. And you have to hold those things in and analyze them, but they're more discrete things. Without going any further, politics and the politics of the day have dramatic effects on price and trade flows. And again, I'm moving through things really quick just because of time, and we want to get to the key weather points. But this is a graph I don't think that's well understood in the U.S. Some of the major Asian companies have based their strategies based upon this single graph. You started to hear it all the way back in 2000, and the predictions were very true. So on one end, if you're a food policy, food safety person, this is the nightmare graph. If you're a trader, this is the best graph you've ever seen, which means consumption in Africa as a continent has continued to dramatically increase, while production has nowhere near. So you see this massive spread that started and has continued, especially since 2000, of consumption to production. The Africans have not been able to keep up. So with that, there should be concern. You look at the last two speakers we've had, or Bobby's had on here. They were amazing talks. I give a lot of credit to the CEO of Verizon, Tim Walker. It was a great talk that looked ahead, and I do commend Bobby for looking at broad topics like this. This is a key piece. You have to look at your varieties. You have to look at quality, and I think Tim did a much better job than I could do in the short time we have. I do suggest you look at it. It was a very good talk that highlighted some of the issues. But as Shawn and I are going to talk today, it's much more deep than just the quality of food. And to me, the quality is exceptionally important, but the quantity is also key. And especially as you move forward, quantity is going to be increasingly key. And some of the technologies we've been seeing, the drip technologies in trees, but the micro data, especially in the Ukraine and Russia and other places, the micro data is changing some of the developed nations. There is reports that some of these areas are equaling the yields that we see without fertilizer on intense micro data in computerized centers where drivers are rewarded by their optimal speeds, their optimal planting rates, and data that we haven't really experienced, but we're on our way in the US. So I'm going to talk briefly before I hand it over to Shawn, very briefly. So we've talked China. I've showed you the African graph with just this immense potential of trade to Africa. China is fascinating. We hear about the policy from the US Rice Federation all the time, how hard they've worked to get us into China, and there's a lot of commendations for their efforts and how complicated that has been in the current environment. And obviously they're the biggest buyer of rice in the world. You know, they're buying 5 million tons, but you have to look at their soybean trade, 5 million to 95 million metric tons. It's a huge difference. You know, again, 5 million tons, estimated about the same next year as well. And you can see the volatility between the major exporters. You know, a lot of volatility. You know, the Cambodians have come on with border trade. The Vietnamese have come on with border trade. We watch the border trade exceptionally close, and that's how you can get to some of these numbers. And one has to remember, due to licensing, they break it down at about 2.6 million tons of indica long grain and 2.6 million tons of japonica each year. What struck me, and I think this is the point all of you should take, everybody knows that China's been importing the biggest importer of rice in the world. You know, at the World Conference, I was very taken back when the head of the Chinese Institute said, next year China will be an aggressive exporter. An aggressive exporter. And I've tried to put this logic in my head of why is China building such large stocks? Why is China holding a huge percentage of the world stocks that go beyond their population? And what is the end game? You know, is it food policy? Is it controlling food prices? It's all a very good question. But again, I was surprised when this professor said China will be a major exporter and they expect to come on aggressively in 2018. So when I look at that, that's a key place. If China exports, do they export to 2 million metric tons, people are saying, or 5 million metric tons? The summary is China can control this market. China can control the direction of your market, to say the least. Huh? So in a brief moment before I hand it over to Shawn, you know, this is part of the current price equation. Again, we could talk much more in depth, and I'm just going to make a key point here. There's certain things that can't happen in long-term markets. You can't have one market get huge spreads over the other, especially when there's questions of quality, there's other questions going on with competition and politics. But that's what you see today. You know, if you look at the prices just a year ago, the U.S. is up $140 a ton, and this is one of our graphs every week in the Rice Trader. Everybody else is up much less. In fact, Pakistan's only up $10 on the year. And so this is a massive change in just the last year. Well, the U.S. in this same line is $175 a ton more than Pakistan. And then the Myanmarese, which I don't have on this sheet, but are in our daily report for the Rice Trader, the Myanmarese have come on as well. And they have at one time been the largest trader of rice in the world. And it's a country to watch along with Cambodia. There are actually cheaper prices than this as well. The U.S. set a spread that can't continue today without major shift. If you look at the historic data, $70 when there was a quality premium is about right. But with the quality concerns, and again, I think the last talk expressed this much better, and that the great efforts the industry is making to try to correct this issue, it's very difficult because you're going to see, and you already are seeing, exports into Mexico and other places that are going to try to challenge this, even though the U.S. has shown amazing consistency in these regions. But anyway, 580 versus 405, or Thai rice, which is excellent, it can't stay there. Again, in the best of worlds, the natural spread of 60-70 with a quality premium makes sense, but 140 from Thai rice, it's not something that can stay. And again, you've seen just huge volatility in these markets, especially the specialties. And I'm just going to show a California patty graph. You can see these volatile trends where they plateau and then they fall off. You've seen California go from $6 over to today. We traded some rice at $15, $16 over recently in the patty market. So very much volatile. And these are the points I've already made. Just huge spreads between the major origins, especially in the fragrance. And you've seen fragrant rices significantly move up versus the normal non-specialties. Japonica rice has moved up aggressively. Fragrant rice has moved up aggressively as others. So you've seen a much larger lift in the specialties. So with that, now we're going to talk about the grains, and then we're going to talk about weather. Shawn, if you'd like to take over and just kind of give a great overview of what we see in the major grain markets.
Thank you, Jeremy. As we had talked about on the one slide about where commodities were relative to stocks, this is another chart that kind of describes where commodities are relative to stocks in something like Bitcoin, which has been the talk of the town recently. This is a typical what we call bubble graph. It's a manifestation of money printing of the system we have, and it happens over and over and over again, whether it's the dot-com bubble of the late 1990s, the housing bubble. We can go on, but they all follow a similar pattern. And where we think we are, and what I think is so important about what has recently happened with the increase in volatility, the stock market getting more unstable, is that what happens is the way you correct overvaluation of stocks and undervaluation of commodities is commodities go up a lot and stocks either go flat to down quite a bit. And I think where we are is we are ready for the commodity asset class, and especially agriculture. If you look at this chart, we view grains as actually being in the lowest position of all the different commodity asset classes. So when we are looking at where one would be, we're not looking at a 1-year trend. We're not looking at a 6-month trend. We're looking at a 5-year to 10-year trend. So this chart is guiding us and is telling us that we feel we are at the beginning of something much more important. And things like crude oil, which has moved up quite a bit, or copper, which has moved up quite a bit, they are further along in the path of their own bull markets. And that's typical. We typically see those markets go up first and the agriculturals kind of move up a little bit later. So we continue to view the position of commodities and ag commodities as being very favorable to a very significant, more bullish reversal. We are very, very big at Hackett Financial Advisors at looking at relative value like we had shown between stocks and commodities. This is a chart of Kansas City wheat relative to the continuous commodity index, which is the old CRB. It's an equal weighted index of 17 of the most widely traded commodities in the world, and it is more ag-centric. When you look at this chart goes back to 1970, and you look at where we were over the last 2 years, we are trading at the lowest relative value for Kansas City wheat, winter wheat, to overall commodities in 45 years. Market that has a huge, huge bull market ahead of it. The cheaper the market, the bigger the move. And so we can impress upon those that are on this webinar that this is a chart. If anyone is bearish Kansas City wheat at this valuation, we beg to differ. We beg to say that one is simply looking in the past and the present, not looking at the historical nature of the future. If you look at where this black line has been drawn and where we have been at touching that line in the past, and you look at where market Kansas City wheat has done, it is consistently bottomed at these areas, and it has consistently had significant bull market moves over the next 5 to 10 years. So unless the history is going to change, we like winter wheat a lot. Wheat and rice are very correlated. They're connected at the hip. In the world that we live in, rice and wheat is what is used to feed the masses. If rice is too expensive, more people will use wheat to live. If wheat's too expensive, they will consume more rice to live. So they are interrelated in how the world tries to consume food cheaply so they can survive and feed their families. So we love looking at the wheat-rice relationship. It tells us which market is gotten ahead of itself or which market is behind. Right now, when we look at the wheat market relative to rice prices, this is U.S. rice prices, we see that wheat is extremely undervalued. So not only is it undervalued relative to overall commodities, but it's undervalued relative to rice. So if one is looking for rice prices to go up substantially in the years ahead, in our view, there's no historical precedent that it can do it without the wheat market moving with it. So we are very, very much intent on watching the wheat market, seeing what's going on in the wheat market, because we know in order for rice to move higher, we need to see wheat move higher. So the recent rise that we've seen in winter wheat off of the lows here over the last month is a very, very good sign that we may be starting to see a normalization to the mean of the wheat value of overall commodities and of the wheat value of rice. So this is another chart that says wheat is an extremely important market to pay attention to and probably will lead. This is as Jeremy had indicated, and he could comment on this as well. There is no one price for rice. There's all kinds of different prices at different levels, and there's different premiums and discounts based upon politics, tariffs, all kinds of different things. But we try to get an overall sense for where is the overall rice price doing. And this is a chart that if you looked at, we had this major bear market from the peak in 2012 all the way down to the bottom. And yes, the bottom in early 2016. And you can see that we've been developing this triangular basing pattern. These basing patterns are notorious for violent breakouts to the upside when they complete. As you can see, we do not have a lot more room left for this to transpire. In fact, this chart will complete by the end of the springtime. So we would expect overall grain prices to start pointing higher anytime between now and the spring based upon how it's been trading. And remember, this has been an extremely bearish time for our overall grain prices in the grain markets, and yet the chart isn't going down. We always say that if a market's supposed to go down and it doesn't, there's a problem out there with the bear case, and we view this chart as something to pay attention to, that when it does break out, break to the upside, we'll be alerting our customers, and sure Jeremy will as well, and maybe he can chime in on this.
Shawn and I talk about once a week unless we're traveling. So, I really enjoy him as a person. He's a brilliant mind to talk about the markets with. So it's a good ability, especially as analysts. It's much different. It's okay to be wrong. We actually want someone to challenge us as analysts, even, on a daily basis. So, I was speaking with Shawn, and, I'm more negative than Shawn on the markets. I have been until the second half of the year. I've been kind of negative. We really have said the same thing from different ways. He keeps on saying, yes, Jeremy, but later on it's going to go up. And I was saying the same thing. And especially made the point when I talked to some of my Midwestern friends, they've already booked in most of their crop for 2018. So they sold it on fears of reduction in prices on these huge stocks. And I remember Shawn mentioned to me, he says, that's a key sign in several market moves. As you move into the crop, it's one of those key red flags, the market then goes up. Huge early selling by the growers usually leads to the ability to capture that valuation. I think it's a key point that Shawn made and just about where the market has potential to go and how prices of today are not priced at harvest. In fact, they're normally just the opposite. Prices of today are almost never what they are at planting and harvest.
As Jeremy said, we take the point of view that no one person, no one company, no one group of people can know everything there is to know about a market internationally. All the different variables are constantly changing. We just don't think that anyone's opinion of all of these variables can consistently predict the future price of anything. So that's why we look for indicators that are highly correlated to price action. This indicator is what we call smart money indicator. It's derived from the Commitment of Traders report, which comes out every Friday afternoon from the CFTC, where they measure speculators, commercial operators, small traders, and such. And what we've been able to do is we've been able to amalgamate that data into a workable indicator. And in this case, what we put in this chart and this slide are buy signals. When we get to the black line, this chart's going, back 10 years, it's telling you that smart money has bought to a level that has consistently been associated with lows in the market and has been consistently been associated with rallies in the market. It doesn't say how far the market can go. It doesn't say how long the market can go, but it says that a significant, meaningful, at least tradable rally is likely to be had. Even in the last 4 years, when we've been basing on the bottom, you can see that we've had rallies, consistent rallies off of these signals that were tradable over the summertime. And so where are we now? Where are we at this point? We have had a buy signal in grains in the fourth quarter that carried over into January, and now the grain markets have started to rally. This is consistent with what smart money has typically been doing, and it suggests that until we get selling in this indicator to a level that triggers a sell signal, we would expect higher prices to continue into the spring and possibly into the midsummer. So once again, this is not our opinion. This is the indicator. This is what the indicator is telling us over. And I can show this. I didn't, for purposes of being able to see it, this is a 10-year chart, but I can show a 40-year chart. And I can assure anyone who wants to see that chart, it looks just as good in terms of its predictive value in buy signals and sell signals. So once again, we look at this and we hear all the negative and bearish talk about all the supplies, and yet smart money, the people that know the market better than anybody else, are telling you get ready for higher prices. This chart's pretty simple. It's nothing really fancy. It's something we've already talked about a little bit, but it's essentially the idea that despite huge production, consumption is now taking over. And unless we find a way to grow crops even faster or bigger than we have over the last 3 or 4 years, which we'll discuss later, we think is unlikely due to weather, it's not a question of if a big rally is coming for this group. It's just a question of when. And like I said, Jeremy and I talk about it. Is it back half of 18? Is it going to take a little longer? Mother Nature will have a lot to do with what happens when that happens. And we'll try to pinpoint later on in this presentation when we think the hot spot would be for that to happen. But for now, the takeaway is things have already turned. In our view, they can only get more bullish now. They can't get more bearish. And so it's just a question of when, not if. I remember in 2005 when we had the storage crisis in the U.S. where we had to pile corn on the ground because we couldn't store it sufficiently. Walking through Nebraska, couldn't see the sun in the middle of the day because the piles were so high. I remember running around telling everybody how bullish I was and how you had to be ready for a big move up in corn prices. And everybody looked at me thinking I was crazy. And of course, what was going on at that time, as most of you probably know, is the U.S. had made a major decision to use corn to produce ethanol. It was a major demand shock that was coming. You could look at the numbers, and it was just a matter of when, not if, demand overtook large supply. What's going on in China, in our view, is exactly the same condition. They've decided to take their corn, which is in very, very poor quality, that they really can't sell to the rest of the world who would want it for different reasons, and they've decided to create ethanol from it. They are rapidly running their corn stocks down, and we believe that it's just that they are going to continue to do that year after year, and it's just a matter of time before that demand overruns large supplies. This slide right here is our best guess as to the timeline of how quickly they're going to be drawing down their stocks and how quickly they're going to be needing to buy imports. Our minimum estimate, is that within 3 to 4 years, they're going to be buying 1 billion bushels of corn from the international market. The U.S. is the only country in the world that has any excess supplies of high-quality corn in the world, the only one. So we view this condition as a precursor, like it was in 2005, to a much, much higher pricing regime for corn, especially if Mother Nature were to get involved. So we would look for Chinese imports of U.S. corn as a very, very early warning sign that this trend has already begun. This is, Jeremy earlier talked about ex-China, in terms of rice. This is a chart similar, but a little bit different. It's essentially looking at wheat stocks to usage ex-China. We know China has a bunch of wheat. He knows how much of it exactly they have or what kind of quality it is. We know a lot of it's probably not very good. But when we look at the actual stocks to usage ex-China, which is the lower circle in this slide, you can see that we're actually not that far off from where we were in 2012 when wheat was $8 to $10 a bushel in the U.S. So what's happening here is the market has been using large Chinese stocks as the reason to remain bearish. Record short positions by speculators. It's an illusion. It's not actually telling you what's really going on under the surface. If somebody really needs to buy wheat, let's say the winter wheat crop in the U.S. turns out as bad as it looks like it could be. Where is someone going to be able to turn and buy wheat in moment's notice? Are they going to be able to call the Chinese and get that quality wheat that they're looking for? Maybe they will, maybe they won't. But we wouldn't bet on it. We would bet on that they're going to try to go to the countries that they've been relying on all along. And when we look at that, there actually is not that much wheat out there to handle a short crop. Volatility, I'm sure everyone's heard about volatility in the last several weeks. Last year, 2017, was the lowest volatility year in the stock market, agricultural markets, I believe in 20, 25 years, if not longer. We did a chart for our subscribers to our report where we went over average historical volatility in ag markets, and the majority of the ag markets had 6-month volatility that was 50% below the 20-year historical volatility average. That means our markets completely went to sleep. The old adage in commodity trading is never short a quiet market. Quiet markets, when they wake up, when the sleeping giant awakens, it awakens to the upside. So we view this volatility expansion in stocks, which is measured by this VIX index, as a warning sign that volatility is now on the upswing. 2018 is going to be known when volatility came back to roost. That is very positive for ag pricing. It's very positive for commodity pricing. If all we continue to do is see stocks go up and low volatility, the ag markets are not going to generate interest that they deserve at higher prices. So this chart breaking out, in our view, is quite bullish. This is a chart that I was just discussing. Historic volatility in the corn market as an example. Look at this chart. 45-year lows in corn volatility over the last 6 months versus 20-year average. I mean, this is insanely quiet. And when we drew arrows at every period that was similar in terms of when we were actually had volatility this low, and you can look at the majority of those cases, the corn market had already bottomed or was about to bottom and had a major move higher in price. We see no reason for 45 years is going to fail to work this time. Remember, never short a quiet market, and the corn market's already starting to come to life as a result.
Yeah, as Shawn's saying, I don't think either of us are saying the market's going to move today or tomorrow. And in fact, the crop choices are going to have a lot of effect on what runs and what doesn't. But there's key signals of what's undervalued.
The cotton market actually has been one of the few ag markets that's actually had an up move. It's actually had some volatility. It's actually awoken. And the main point we're trying to make here is that the rally that we've seen has kind of gotten ahead of itself in our view, meaning the acres that are coming that should be planted this spring, like rice, are likely going to be a hindrance to the price going further. Not to mention the fact that as price moved in to this higher band, we were in major resistance and also a point where mills were backing away. We don't think that cotton is ready to crash and burn just yet. We think it still needs to hang in there for another 30 days to maybe 60 days to make sure that the cotton farmers deliver and plant those acres just in case Mother Nature is unfavorable this summer. But it's one of the few ag markets we're actually on the bearish side, that we're less bullish about, that we think cotton farmers ought to be locking in some cash sales, should be really, locking in a good price. There's very few ag producers that can say that there's a margin, but in cotton there is, and we wouldn't look a gift horse in the mouth there. This is an idea of what our expectation is for cotton acres in the upcoming season. As you can see, we've been on a series of increases the last couple of years, and we think we're going to be heading to a new, high here in acres. And if we have good weather, we're going to have an even bigger crop than last year. And we're not so sure that demand is going to continue to be able to support that kind of production out of the U.S.?
We're going to talk about weather. A bit of short, and this is going to be more of a dialogue with Shawn and I talking as we move through slides. So if you summarize what we said is the markets have a lot of volatility ahead. We haven't seen the level of volatility probably coming for a long period. And you need to really have a crop issue for the markets to run. But when that crop issue happens, consumption is so high that that move will be amplified. And I think Shawn's done a very good job here as he goes through as an example of vegetation in South America is not good, especially in Argentina and key areas in the south. And you got to watch the Mercosur rice crop, especially for those watching rice. And obviously wheat and other crops is a critical area. And there's just a lot of stuff you need to watch in this short period. You know, as Shawn and I talk often, everything is fine as long as everybody has a good crop. And as a premise into the longer term weather cycle, you have to look at the Indian monsoons. You had only one really Indian monsoon that was bad in about 40 years. Highly statistically irregular. You know, amazing weather that has pushed world production perhaps as much as fertilizer has. We've had amazing weather beyond normal statistical probability and variation. Wouldn't you agree, Shawn, as we just kind of move forward?
Yeah, I mean, the weather has been exceptionally friendly. And reversions to the mean in all statistics always occur. And we're moving to the point where we're stretching that statistical average so far that weather volatility is just like price volatility is highly probable to come in the years ahead. And that's what you have to prepare for.
You know, and just to personalize this for a second and a little bit of comic relief, you know, California is a great example, to use my home area as a key thing. When you don't take care of the issue of today, when a leader doesn't challenge a key issue, usually that small issue turns into an extremely large issue. And we saw it in California when there was cracks in the Oroville Dam. And just to show you the volatility in weather, I'm going to give you a snapshot of California. But first, let's look at the dam. This is Lake Oroville before these little cracks in the dam that somebody who will remain nameless did not fix for $200,000. Well, they didn't fix these cracks in the dam, and we've had huge weather volatility from drought to exceptionally wet last year, where during planting we lost about 100,000 acres just due to rain during planting. Well, this went down because they had to let go, and the whole area, as you can see, ripped out. This is the power of Mother Nature and weather volatility. You don't see nothing here. It looks all fine. This is just the excess water. The main water comes here. That ripped a hole that's about 200 helicopters. And that was in the matter of just a few days. That's the power of water. That's the power of weather change that we haven't seen. Our generation hasn't seen volatile weather. It hasn't seen volcanic activity like past generations and centuries ago. You haven't seen disease like we have in past generations. So our perception of the current reality is the perception of the current reality. And just to put it in volatile weather aspects, using my own state as an example, look at the difference between record weather last year, 94.7, blew out the record almost by double, to the current rain. California is today about 66% of normal after being near double last year. And you can look at some of these lines of the last several years. You've had several drought lines to then record back to drought. You know, and the tale of two cities I'll show you in a second, but just to back this up before I go back, you have the current lowest or nearly the lowest snowpack in history. So you're having these extreme weather volatility, extreme outliers in weather you're seeing here and throughout the world. You know, vast changes between wettest to driest. Something is happening in the change in weather. And the question is, what is that? A lot of guys will premise it's climate change. And what is climate change? What does that mean in the grand scheme of grain production and our markets? But to put it in perspective in California really quickly, there's two different key dams for rice. One is Lake Shasta. Lake Shasta is full, which would indicate you're going to have a huge production year. Lake Oroville is record low. not just record low, but record low by a huge margin in acre feet with no snowpack. So what is California production going to be is just a good example. Who knows? When I talk to wise marketers in the industry, who I talk to to get an understanding what things will do, they said it's easy. Prices will be somewhere between $5 over and $20 over, Jeremy. And I think that's an accurate assumption of this market. You know, is there going to be rain? You know, are they going to have to give very, very low to no water out of Lake Oroville? Both are plausible today with a huge amount of rain left in the season. You could recover like you saw last year, but it's unlikely. Where on the Lake Shasta side, you have full water allocations. It indicates a super full crop at these prices, and supplies should be super plentiful, versus Oroville, which is just the opposite. And to me, this is a good summary of where the interesting stuff we're getting into. The stuff we talked about are very interesting in their own line. Rice alone is very interesting. You could talk about politics. The association of grains is very interesting. But today, this is the real topic. What is weather going to do, and how is it going to affect your farm and your processing plant and your government? And if the world's not valuating food appropriately based upon the history, so then what? What happens? So we're going to skip, and we're going to start to talk about something. This is key. And in fact, you know, about a year ago, I gave this speech right after the president of Thailand. So this is a topic that very high-level players look at, are starting to understand, and could be probably the key piece over the next 10, 15 years. If you agree, maybe 10 years, actually 7 years, Shawn. Wouldn't you agree it's really going to start to hit?
Yeah, I mean, it always occurs at the troughs are the most extreme examples of this, and we're entering the trough now. So the next 5 to 7 years will be the first wave of this dramatically increased volatility. So I agree, the next 5 to 7 years.
Jeremy, let me ask a question. A question came in. What percentage of California rice acres are dependent on water from Lake Oroville?
It's a good question. It's about half and half if you look at it, just to keep it very simple. But it's not that simple. So there's groundwater aquifers, obviously, that we pull from. So the Shasta is about half the acres with the Colusa County and Glenn County. And then relatively, Lake Oroville is about half the acres. It's 45 Lake Oroville, 55 Shasta, if I have the numbers right. But there's also little small things like Western Water District takes water from Lake Almador. A lot of these water districts can pull from their underground aquifers. So it's not a simple equation. And there's been a lot of tree crop growing that have taken away from rice acres that have really affected the top end. So to answer the different question, what's the range of planted acres? Somewhere between 530 to 300,000. And depending on weather, you could plausibly have either. And in this level of volatility, you could have either. So hopefully that answers the question, Bobby. In summary, and this is a key topic that we're going to briefly talk about and then talk about the implications. So the sun goes through an 11-year cycle. It's called, the solar cycle, and you can watch it by sunspots. Interestingly, when the solar cycle, the natural 11-year, goes to a bottom, it has a high correlation to price increase. Lower solar activity means less production in the northern hemisphere, more or less. So that's fine. So you look up, okay, we're on the low end of a cycle right now, which you can actually see here. We're going into a time, to follow Shawn's graphs, that would indicate lower production in the world and higher prices. But what people forget, and it's affected, even the last two speakers I put this talk into, every piece of our grain analysis for varieties have been during some of the best solar cycle in history. So that means variety development has been based upon extreme outliers of our solar activity. The last time we had a real reduction is the 1800s. So there's something called the grand solar minimum, not the solar minimum, the grand solar minimum. And if you look back, and we have a great amount of data that we'll go through here, the last solar minimum was the 1800s, 1790 to 1830, they call it. In the middle of this, there was a year, 1816, it was the year with no summer, they call it, where Mount Tumura in Indonesia erupted, where there was heavy amount of volcanic activity, and grain production really went down. But since that time, you've had average to amazing since the 1940s. And if you look at our natural timeline, you've never seen this level of solar activity, which is very positive to production. And in fact, you see this big Dalton index, it's called, on the main graph here, which is the long-term based upon ice core samples. It's a blip in the solar cycle. It is not a real reduction. This massively affected the world. And all of this data here, a lot of it is based upon the Chinese. The Chinese have kept solar sunspot data back to the 1600s. This down here is actually based on ice core samples. Ice core samples, you can get it back to basically much further, but it's good data within this period. If the coming cycle is a marauder, it would be exceptionally destabilizing to the world. If it's just a Dalton, it's destabilizing to the world on an immense level, to the point where the world will have to evaluate food much differently than it does today. And our variety analysis will have to change because you'll see colder temperatures. So this isn't a theory, and I'll let Shawn actually, he really helped me in this topic, as we both have learned and talked about this. He's very good on this topic, and we'll move to him in just a second. But you can see this isn't hypothetical. NASA is currently calling for a grand solar minimum that it's currently occurring, where the natural sunspot should be up here, and it's flattened out. And interestingly enough, NASA plans to do their first launch ever to the sun, a satellite, and it's going to happen at the end of this year, or middle of this year, July 31st. It's only going to be a satellite basically the size of a car, and it's only going to be very much, just barely off the surface of the sun. I believe it's 4 miles is all. So NASA is extremely watching this cycle, and they are predicting this. Shawn?
I think the important thing to try to understand is why do we get greater weather volatility at troughs in the solar cycle, even the normal solar cycle. And the reason that happens is that there's a very predictable set of weather that occurs as we go in through a trough. The first thing that happens is that you get a large and very aggressive El Nino as you move into the trough. So we're moving into the trough, and we're heading into an El Nino. Based upon weather models and our analogs for the solar cycle, a major El Nino is expected to occur later in 18 and last all the way through 2019. For those that understand El Nino in Asia, you know El Nino in Asia does not work very well. It usually brings a lot of drought. It affects rice production, affects wheat production, affects all grain production very significantly. But as Jeremy correctly pointed out, this is just not a solar cycle. This is a grand solar cycle. So think of it as a magnifying glass. It takes the normal trends that we see, and we've known about this for decades, and it blows it up into a much larger volatility event. So what we would normally expect out of El Nino is going to multiply in its impact. When we went back and did the analysis of what does this actually mean and which country would be at greatest risk, it's China. China drought is the highest risk outcome of the beginning of this grand solar cycle trough minimum that we're going into. We would expect that to occur late in 2018 and have a drought well into 2019. And Jeremy talked about in the 70s how we were dealing with famine in China and how people were valuing food differently. It is not at all unthinkable that as China has been reducing its corn stocks, lowering its purchase prices for rice, finding ways to export more, just as they're doing all that, liberalizing the corn price, that just as they're doing that, they're now going to have major production problems and could enter a period where food shortages in China could be, much more magnified than we've seen in a very, very long time. And given the fact that they are now a much more prosperous country than they were in the 70s and consume a lot more food than they did in the 70s, the issue could be very, very destabilizing, as Jeremy had pointed out. So, so this graph here talks about how under normal solar cycles, how China does see consistent lower precipitation versus normal.
Yeah, no, if it's all right, Shawn, there's a graph that we put together. I'm just going to run to really quickly, and we'll go back to Shawn's graph in a second. So to solidify the main point here, Shawn and I are data guys, and we really like to analyze the small pieces so that we really come to the truth. But let's give the big, broader brush to you. So what does that mean? So prior to the last Dalton Index, which again was a very small solar minimum, it was a very light grand solar minimum. And if you take history against the grand solar minimums, you'll be fascinated. A light solar minimum, the bad crops went from 21% before and 16% after. But during the Dalton Index, you doubled the amount of bad crops. Imagine what would happen if we doubled the amount of bad crops in the U.S. What would happen? You would have food issues in the current environment with the billions of people we have to feed today. And that's Shawn and I's concern, is that what is the main purpose besides informing about the market and helping provide solutions to this industry? To highlight this as we have to other countries, that if our variety analysis is based upon an outlier, what happens when that outlier passes away to normal solar activity? Do our varieties hold up when it gets colder? Do soybeans continue to be grown in the Dakotas as a solar minimum occurs and you drop significant temperatures where crops have a lower growing degree days? This is a major, major concern for us as you look forward. And the reason we're talking about this, because it's no longer if a solar minimum is coming. It's when, which is now, based upon the NASA data, and how big is it? Is it a marauder? Is it a sporer? This probably led to the push into the Americas. This, if you look at history against this, and I'm going to show a graph on the Chinese society here in a second. Take society against this for a second. What happened during the Dalton? You had major food shortages. What happened here? Major and horrible issues. So to me, it's not how big the grand solar minimum is. It's actually going to be how significant. Is it going to be extreme volatility where food has to be evaluated in an extreme core? It's just a side note. Ask yourself, what do you think post-harvest losses are in this country? Or just like in the Philippines? In the Philippines, I'm told rice losses post-harvest are $1 billion a year. Indonesia, it's $2 billion a year in post-harvest losses. Stuff like this would have to change. Food would have to be looked at much differently. So just to move back to this and to move ahead, because I know our time is short, if you just take this thought against the Chinese market, as Shawn has very well amply stated, you can take the Chinese political system against these minimums, and you can see how many dynasty changes occurred at the minimums. Over and over, the Dalton or the Marauder showed a change in dynasty, the Dalton showed a Chinese in dynasty. It would be my assumption that the Chinese know their history better than Jeremy and Shawn. No different than we would know our American history better than the Chinese. Why have the Chinese kept data for solar sunspot and the solar cycle on paper back to the 1600s? It's important to them. Why is it important? They've seen major changes in their society based upon these crop shortages. So this is a critical aspect that we see players watching. And is it the reason the Chinese have built stocks? Are they holding stocks for that sole purpose, or is it completely strategic? They want to hold a large stock-to-use ratio. And then I guess that's kind of my general thoughts before we wrap up. But it's very critical to me that as you look ahead, this could be a significant factor, and I think you're already moving into it, with the next rebound in the solar cycle almost being flat. Wouldn't you agree, Shawn?
Yeah, and the other thing to remember, Jeremy, is that during grand solar cycle minimums, the troughs are 2 to 3 times longer in duration. Meaning normally in a normal sunspot cycle, it's 1 to 2 years of trough and then you come out of it. In the grand solar cycle minimum, it's 3 to 5 years of trough. So we go through a much more elongated period of severe weather before we come to some kind of an improvement in sunspots and some kind of an amelioration of weather. So that's the other thing to remember. It's not only the lower sunspot amplitude, but it's also the longer duration of troughs that has a disproportionate impact of global production.
If you look here, this is kind of where we are in the solar sunspots. What Shawn is saying, the normal, you would just keep this 11-year, you'd bounce along and you'd rebound. The last one we didn't rebound, and the next one it's actually flat and it drops off like you're dropping off a mountain. You don't recover your solar activity as well.
Look at the trough, the prior trough, how much longer it was than the one before it. And look how much longer the trough is on the next one. I mean, that is very, very impactful because it doesn't allow the market to recover and rebuild. It just continues to be bad weather year in, year out. Like we've seen good weather in the last 4 or 5 years. It's a cumulative impact.
Yeah. So what does this mean? Obviously, right now you're in a stable market and prices will naturally move. This is looking ahead. This is looking ahead, which is what good leaders do. You look 10 years ahead while you're dealing with the day-to-day. So if this is occurring, and Shawn and I don't know the future, we just see key signs and we believe the NASA data is showing it's occurring, and as does NASA. What does that mean to the U.S. industry? What does that mean to the overall world? Well, first, weather will change. I'm going to go back. What they say is that the jet stream, instead of going up into the Midwest, will flatten out and probably make California very wet and the center of the U.S. very wet, but the upper U.S. will have some major issues. You also see an immense increase in volcanic activity, an immense increase in earthquakes, highly volatile weather, which you're seeing already today, an increase in the amount of disease and the increase in the amount of vectors for insects and vectors for fungus and bacteria. Basically, you're going to see a lot more problems. And that's what the history shows, and there's several good graphs that Shawn and I have gone through that show the amount of volcanic activity is exceptionally correlated to this, which is just tied in with earthquakes. So that means the world will be much more volatile. The food stocks will be much more volatile, and that's going to have to be dealt with as this occurs. And in that, I'm just going to go back to one slide right here. There's been an idea that CO2 is bad for the world, okay? And there is some truth to that. Air quality is critical to the world. You only need to look at Hanoi, which is now the world's, they say, I think, the most polluted, or top 5 for sure, in the last 10 years, to see the effects of air pollution. It's amazing what we can do in a short time. But very key, during a grand solar minimum, carbon dioxide in the atmosphere drops. And I'm amazed, probably due to my background. I actually have a degree in biology. I one class degree away from chemistries. And I did a lot of variety analysis. I grew up on a farm, but my first job was actually doing variety analysis with my uncle Steve at the NDCU experiment station. So very simple. You look at the chemistry equation of a plant. It takes carbon dioxide plus 12 water molecules and sun to make glucose, oxygen, and water. If you increase the amount of carbon dioxide, you're actually increasing plant growth. And that's what studies show in a very simplistic purpose. So if you take that back to today and you decrease the amount of CO2 in the atmosphere, you're completely changing that equation. There's not going to be as much as available CO2, so the ease to make sugar, which allows the plant to grow, is going to decrease. And again, smarter men than me have done studies in greenhouses that show the exact piece. If you actually increase, even at today's level, CO2 levels, it pushes plant growth. So taken all together, what do I see? I see volatility. I see market volatility, I see weather volatility, and I see a change in the way we look at food coming. It's going to be a process over the next decade. It's not going to be immediate. And we do have a large level of food supplies today, which is very good. But the amount of money going into eggs since 2007 has dropped. When I talk to my friends overseas who are doing research, the amount of money that is gone into research has dramatically dropped. Hats off to the Gates Foundation. They've done amazing things throughout the world. They did amazing things from 2005, 6, 7, 8, and still do today. But many of the institutes around the world, their funding has dramatically dropped. Well, that means the ability to deal with this issue has decreased. So, I mean, of course, Shawn will have some closing thoughts, but that's my worry. I would hope for better times, that would be stable and things would be easy. But unfortunately, I see a very unstable time to the next 20, 30 years. Shawn, do you have some closing thoughts?
I mean, Jerry, you did a great job summarizing everything. I guess I'd like to alert everyone to be on the lookout for something that I think is very likely to happen. At least in history, it's likely to happen, and that is a very, very large volcanic eruption. Throughout history, we know that most of the volcanic explosivity index of 6 or higher, which measures how much sulfur dioxide gets blasted up into the stratosphere, has all occurred except for one during these grand solar cycle troughs. And when Jeremy showed that chart of 1816 and how Mount Tambora out of Indonesia went off and caused a massive acceleration of weather volatility in the ensuing 2 years, that is something that is likely going to happen during this next trough. And one really needs to be paying attention that when you hear that, when CNN talks about that, or wherever you get your news talks about a massive volcanic explosivity index or 6 or higher, you had better be ready for a very, very nasty period and be on the lookout for an acceleration of the trends that we're talking about here. I don't know if it'll happen today or tomorrow or 2 years from now, but we know that the probabilities of it happening during the trough periods of grand solar cycle minimums are extremely high. And I want to make sure everyone understands the implication of that when and if it occurs, that it's going to mean a substantial acceleration of these bullish volatile trends.
Yeah, very well said, Shawn. Some of the wisest things I think said to me in the market as I talked to the leaders before is that, Jeremy, no year is the same. No year. If you think this year is going to be like next year, you're wrong. And also the markets go in cycles. There's the short-term cycle. There's the long-term cycle. And the market very much acts as we do. There's times we get overconfident. There are times we learn humility. There's times we have to deal with difficult issues. And there's corrections, both in our lives and in the markets. But they go in cycles. And to see the systems behind the systems is where you can really start predicting the future, where you can start at least predicting the direction, not the day-to-day, but the direction of the future. So to me, again, and I know Shawn agrees, watch the cycles, manage the risk. When you get good prices, especially as a grower, book in your good prices and be happy with it, because you never know what the market's going to do tomorrow. But I see a vast change ahead. We're going to reevaluate the food policy. Those of you, which would I expect most people on this webinar, that have knowledge in food and ag and growing, guys like Bobby, unfortunately I wish Bobby was another 30 years younger like me, but that knowledge is going to be highly valuable starting in about 7 years, probably to the end of your career. Probably 30, 40 years, hopefully not 80 years like the Marauder or Spore Index or Grand Solar Minimum. I see a change coming. We won't know the day. It'll be a slow process. But what I would leave you with is that markets go in cycles, and they're never the same.